Everybody, welcome back to the show. And let's end the poll there. Welcome to the show. Welcome to the show. And I was talking to some people over the weekend, and just people going all in on these AI stocks, right? And I asked, what do they do? And nobody seems to be able to tell me. A lot of them just they talk about AI. It's gonna pop. And that, my friends, is where we are. We've been in the most incredible, mind blowing party for the last like 2 years. And it's just wild. I've talked about this over and over. But it looks like the first person to get a headache at this big party, maybe the hangover party, is Oracle. Now, for those who have been around, Oracle, they've been here for since the dinosaurs roamed the earth, pretty much, making databases and stuff. They're reliable, slightly boring. They're the uncle of the tech world. They make databases. It's not sexy. It's not fun. It's a living, and we kind of need it. But Oracle saw all the cool kids like NVIDIA, Microsoft, getting invited to the AI party, and they got a bad case of FOMO. They went out, hung out with Jensen, bought a leather jacket, a motorcycle, decided they were going to be a fancy AI company too. And boy, oh boy, they made a splash. Back in September, they announced they had a massive deal with OpenAI, and we watched their stock explode like 40%. Basically, they said, hey, we're going to provide the cloud infrastructure for the biggest name in AI. The stock popped, everybody cheered, champagne flowing, Oracle was cool again. But then the smart people started digging in the numbers, the details. Well, it's kind of hilarious. The story takes a turn for the ridiculous here. The deal was part of the cool kids, I guess what the cool kids on Wall Street call vendor financing circle jerk. And I guess you can't, that's not proper to see on YouTube. So let's call it revenue boomerang, right? It works like this. OpenAI, a company that doesn't have billions of dollars, they don't make billions of dollars, they don't have free cash flow of billions of dollars, agrees to pay Oracle billions of dollars, who has billions of dollars in debt, for cloud services that Oracle hasn't yet built. It doesn't have to supply, using money that Oracle is going to have to borrow to build the data center in the first place. And right now, data centers are taking 2 to 3 years to put online per gigawatt. And unless you're XAI, which you seem to be able to pull it out in 1 year, it's kind of like promising to pay me $1 million for a custom built Ferrari, which gives me a purchase order that I can take to the bank and get a loan to build a factory that maybe someday I could possibly build your Ferrari. But I don't even work for Ferrari. So, I mean, it looks great on paper, right? But it's kind of a house of cards built on debt. And this is where the story might get a little bit more interesting. See, while stock investors like the ones I was talking to this weekend were cheering the headlines, another group of investors has been watching with their arms crossed, looking kind of unimpressed. These are the bond trader guys. These are the debt investors. Think of it this way. Stock investors, we're dreamers, right? We buy a piece of a company, believing in the story, the growth, the glory, the big money, the Lambos, the retirement. The bond investors, these are loan sharks. They tend to be the ones who lend companies money, and all they care about is getting paid back. Plus a little for the house. And the bond guys looked at this Oracle plan and said, hold on a minute. Hold up. They saw what Oracle's debt to equity ratio is. It's already a staggering 500%. It means they have debt 500% of their equity. To put that in perspective, that's like having a mortgage that's 5 times the value of your house. Amazon's ratio is 50%. Microsoft's ratio is 30%. Oracle and Larry Ellison, they're playing a very, very leveraged game right now. So last week, the grumpy accountants at Barclays did something that's probably a massive red flag for every AI investor, if you've paid attention or not. They didn't just downgrade the stock. They downgraded Oracle's debt to a sell rating. This is the bond market's way of saying, we don't think you're good for the money. They looked at the numbers, concluded that even in the best case scenario, Oracle might be bankrupt by November 2026. Best case scenario. This is the first real domino out of this bubble. Puts a timeline on it. Kind of a clock. The bond market, which is usually smarter than the stock market, is telling us that the AI party is being paid for with a credit card that might start getting declined. That's not a good sign, everybody. So, what does it mean? Is the AI party over? Heck no, not yet. But it does mean the music might be changing up. New JJ coming to town. The era of growth at any cost, this is ending. The era of how are you going to pay for this is starting to begin. This isn't a crisis yet. This is an opportunity for savvy investors to get out of the crowded, noisy ballroom where the party's just been going and it doesn't matter what the numbers are, and find the real money being made in the back rooms. So where do we look? As I say every day, the picks and shovels stuff, we talk about this every day. The people that sell the equipment get their money now. Same is true for AI. Instead of betting on the AI models themselves, look at the companies actually building infrastructure. People supplying stuff like ARM Holdings. They design super efficient chips that are critical for data power hungry data centers. And they get a royalty every single chip that has their technology in it. There are other opportunities in this data center business exploding. Another one, Lumentum Holdings, which makes their optical components that allow these data centers to talk to each other at light speeds. Their production lines run at full capacity, 24/7. Demand is still, their demand book backlog is still growing, outpacing their supply. And the power grid, this is probably the biggest one out there. The dirty secret of AI that's really hitting hard is the insane amount of electricity it's going to take. We're talking about data centers that require the power of small cities. By 2030, data centers could consume a quarter of all the electricity in the United States. In 2024, that was 4%. We're going to grow from 4% of electricity usage in the United States to 25% in 6 years. That's the projection right now. All that power has to come from somewhere. Rolling blackouts, new power companies, new power facilities, power plants, nuclear. I don't know if we can build nuclear plants that fast. We're talking about companies like Constellation Energy, the largest producer of carbon-free energy in the United States, whose stock is up 80% this year, or Vistra, another massive power producer. You can even get broad exposure through ETFs like Vanguard Utilities, Victor Papa Uniform. For 2 decades, utilities have been boring. Now, they're like the secret backdoor play into the AI revolution. Maybe one of the biggest booms we've ever seen. Does it go bust? I don't know. There's potential, especially if Oracle folds. So, as the AI hangover begins, the market starts to punish the companies built on hype and debt, like Oracle. Smart money's not going to be running for the exits. It'll be quietly moving out, buying the companies that are selling the power cords, the extension cables, the power plants, for the party to keep going, because no matter who wins the AI race, we all plug into the same grid. So that's what I got this morning. Hopefully that was helpful. Dun, 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 dun. How do you join the community? You're here. This is the community. Dun, 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 dun. If you want access to Discord, you got to buy something. It's for customers. Hate to say it, but it's for customers. I don't. Freeloaders. It's been too many scammers try to freeload, so it's for customers only. And links in the description. It costs like $5 to buy something. Of course, there's much more expensive stuff. And let's do another poll. There you go. Why not try the bear money trade? All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining. Not a recommendation to buy or sell any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. I make predictions. Sometimes they come true, but I don't have a crystal ball. I got a bag of unicorn dust that I sprinkle around as much as I can, but it's not a magic wand. It's not a crystal ball that predicts the future. I use price action. I'm a trend pullback continuation trader. If you want somebody to tell you what buttons to push to make some money, go hire a financial advisor. And just in case you wonder how much money I made, we're up to $33,000 this year. We started tax day right back here. Made $33,000 so far. It's not a bad shake. How are you doing since tax day? You made $33,000? Done better than that? Great. Good job. Congratulations. Here's the beer money trade in action right here. Did it Monday. Did it Tuesday. I posted on X. Links in the description. So, yeah, I'm just interested why people don't do it, Craig. I know the people that do it, great. We already did a poll for that. Came in and missed it. Sorry. So, channel members, thanks for being here. Rob, David, Ivan, Don, Gaten, Mad, Cliff, Mark, Ted, Lieutenant Colonel Goose, good to see you, sir. Rongemer, Ed, Fred, Ed, Fred, B, Will, Darren, Donald, Frank, Kathy, Mary, Gary, Pauline, Diane, Rob. Glad to see everybody. Glad to see everybody. So this is my 50K challenge. Somebody kind of blowing me up on X a little bit. Like, when are you going to sell this? Probably not going to, like, first off, 50K challenge is for my Termite Trading Lab group. Want to know how I manage a whole portfolio? So this is it. I started an account that I could share every trade. I share every trade, right? The mission and goal of this challenge is to generate this account where this 1 month number right here becomes 50K per month. And we do it for 3 months and 1 year, basically 6 months in a row. And I get there, I complete the challenge. So that'll be 300K for 6 months, 50K a month for 6 months. And then I'll consider my challenge complete. Now, this number, it's not 50K. So I got a ways to go. This might take me 3, 4, 5 years to get here. And I share all the trades. Now, they're also posted. This has happened a couple times lately. KInfo, it's linked to my account and it posts all the trades. You can see there's a bunch of these NASDAQ beer money trades. I kind of like them. They're high probability. That's the whole point of this account, is that I want stuff that's reliable, I can count on, that I can take to the bank, essentially. Now I've got some other trades in here. Some Chipotle, some pins, some TSLL, some Soundhound. I got some other stuff happening in here. ETHA. That was a nice one. Gap keeps being a nice one. Keep coming back for that one. So I've got some stuff going on that's not just the beer money trade. Now you may be wondering about this trade. I've talked about it quite a bit lately. Come in here late in the day with a couple hours left in the market, and I do a credit spread far out of the money. I've talked about it quite a bit. I talked about it quite a bit last night on 30 Minutes of Awesome. So if you missed it, you should come check it out. But it's low dollars, right? I was only picking up $40 a contract for a $5,000 risk. $40 a contract, $5,000 risk. You know, for some people, that's chump change. And that's why you see the numbers up here. Now, I post them on X every day when I get into it. So if you want to follow me on X, if you want to get an alert when subscribe to me on X or whatever they call it, follow me on X. I'll post them on there out for the public. The big thing is not many people want to make $40 risking $5,000. And sometimes it's only $20 risking $5,000. Sometimes it's $100 risking $5,000. On average, I'm going for about $40. You can be like, wait a minute. $40. Check this out. $40 times 250 trading days. That's $10,000. You know what $10,000 is? That's a 200% return on your $5,000. And you might be like, well, that seems pretty risky. These have a 99.7% chance, usually higher than that. Usually it's greater than 99.7% chance of working out, where I keep the $40. So if we go back to the math, 250 trading days a year times 0.997, that's only 0.75. So one day out of a year, you might have a problem. And actually, it's one day out of 333 days. One day out of 333 days. 1 divided by 0.003, excuse me. One day out of 333 days. So if you can avoid the one day, and as I was talking about last night, there's some days to avoid, like FOMC day. Those happen like 8 times a year. So avoid those. Helps a lot. Avoid big down days like we had October 10th, where the market just kept dropping and dropping and dropping. That looks something like this back here. Roll back October 10th. There was no bounce. Started out fine. Then we dropped, and the drop kept dropping. Had a couple little pauses, but the drop kept dropping right into the close. Avoiding days like this has proved, when I started diving into it, proved to be the smart choice. So that's why the beer money trade. But in the end, it would seem that not very many people want to do a trade like that. It's not going to make you $500 today. At least not with $5,000 on the line. Maybe like, well, can't I reduce the risk? No. You could increase it per contract and do less contracts, kind of. But the risk reward gets all skewed up if you go closer to the money and try to get bigger rewards. and you're more likely to get hit. So most people think it's too expensive. Seems to be the number one reason. Too little return. Sorry that 200% return annualized is not good enough for you. Kind of crazy when I look at this right here. Reports. Come in, look at symbols. And made $790 on it so far, just last couple weeks. So anyway, and just start small. Build your confidence in it. That's what you do. That's what you do, Skags. I've been doing 6 contracts. That's 30K risk. 6 contracts. Makes me like 200. I think I made $242 yesterday. I made 255 the day before. I started at 1 contract, then did 2, then did 4. Now I'm up to about 6. So why would you? Like, you're so, like, the stop is 300 points below the money. 300, well, try to be 350 points below the money. So you can ask lots of questions. I suggest just doing them in paper. Learn how it works. So do the numbers yourself. Gain confidence. And let's take a look at S&P 500 futures. Up a little bit. Jumping in. Still in the danger zone. I thought we'd climb right up to about here and then potentially roll down. This may happen. Government reopens and then we take a spill and then we climb back out. That's what it looks like might be about to happen. That's, you know, people always want to know why. Why? This one's about to be more than 42 days. We're expecting to reopen before 10 a.m. tomorrow. I'm not sure they can. Like, I don't know when the vote's scheduled for the House, but right here, House is having trouble getting there because the airports are shut down and air travel's all screwed up. So people are having trouble getting back to D.C. Can they vote before 10 a.m. on Thursday and then send it to the president and get it reopened? I don't know. Still expected by Friday, I guess. See what happens. I'm kind of thinking that possibly we come up to this level and get a retrace right like that. It's in the charts. That's like, I drew this back here when we were back here. I drew these arrows. We went up a little higher than I thought. Came down and hit the pretty much the exact level where I thought we would bounce. Now if we go up again, I mean, this is where I thought we would come up to. I thought we might retrace, maybe back down in this area, then come on up here around 7,000. So that's kind of my outlook for now on the S&P. Why am I looking at futures and not the cash? Because there's gaps all over the freaking place here and makes it difficult to predict everything. See, I drew that arrow back there on the 30th, and we came down here by the 7th. Still got a date with higher. In Q, we're still struggling right here. This looks pretty clear on a move down. That looks pretty clear on a move up, and we can very easily take a trip down here. NASDAQ, Russell, kind of looking like we want to take a trip down there to the roadmap line. Here's the high, here's the low. Struggling below this resistance zone. As long as we can't get through it. Downside continuation possible right there. We keep grinding this all-time high. Keep grinding on it. Can't seem to stay above it. Target's up here at 2,600 and then 2,700 above that. Oil, well, guess what? Break down below that, coming on down. I gave it a small chance of coming up to the top. If it bounces right here, that's an inverse head and shoulders inside an inverse head and shoulders. It's interesting. Probably gonna go down. The target's down here. Low 50s, and this may spark off a war in the Middle East. Some sort of missiles flying, something like that. GC. Here's the resistance. Right there at the 618, 4,200. Expect another leg down there. Bitcoin. This is just toying with everybody. I thought this might go on for another couple days. As I said yesterday, we may extend this out for another 3 days. Well, here's day number 1. Got 2 more days to stay in this zone. And then we're going to potentially plummet down here to this ideal support. Maybe it just happens tomorrow if we get that government reopen thing and the flush out happens. I'll be cautious. That's Bitcoin looking like a downside. ES looking like we have a downside. Oil looking like we have a downside. Gold looking like we have a downside. This could be a sell everything and figure it out later type thing. I'm not trying to be bearish. I'm just cautious. Like, I am long as fork. Right? Most of my positions are long. And also looks like we're going to come down to the 2,500 level. I have some VIX, just a small position. 30 strike out to December. Paid about $1 a piece for them. NKD. Are we going to do a third move down, or are we going to break out and head higher? It's a global liquidity indicator right here. We're in the danger zone for a pullback, a bigger pullback. Dollar. Oh, we can save the roadmap line here. We can save this. We can hold on to this right here. Break on higher. 102 is the big resistance. We get above that, things are going to get spicy to the upside. Below here, probably come on down to 98. Below 98.5. Excuse me, below 98.5. Right there. Probably heading on down, back down, maybe lower low. Apple has been, that's a lower high. First move down, retrace. It's all set up with a potential to come down further. Retest that uptrend of lows. If we get below that, breakout in the roadmap line. Apple just doesn't look very strong. Amazon doesn't look very strong either. Holding on to this 618 retrace. This first move down, retrace, next move down. Google holding right on those highs. 304 is the next upside target there. Meta. So is this pullback going to push us down to the ideal support around 580? That would be a buying opportunity because the next move for Meta sets up a major upside move right there. Microsoft. It's been straight off the top here. Little bounce action. I want to see this flush on down. I want to see it get down in here. Right around 480 somewhere. That would be kind of my ideal spot where I think we're going to. If we get below that, though, we could come on down like Meta for a deeper retrace somewhere down in the low 400s. NVIDIA. So this is also what concerns me, is that the two biggest companies, Microsoft and NVIDIA. Oh, look at that. Probably just cashed out. Yep, I just closed out. Cool. So if you're in supercharged alerts, Lil X just hit the target at 2350. There. Pow. So NVIDIA, pull back. Retrace. Third move down. It's right down in here. I'm not sure we can go higher before we go lower. Now, if we come down here, this may set up the bigger rally up to 215 or possibly even up to 230, 240. Tesla, looking, the longer we kind of sit here, the more this looks like we're going to have to do a dip right down here around 400 before we can go higher. Netflix found resistance at the roadmap line. I was thinking the split would be the catalyst, but maybe the pullback in the market is the catalyst to come down here. The low 1,000 area. So far, just grinding that out as a wave 4. That's not the right list for today. Save, reload. 99% sure AMD was on the top of the list. Yeah. So AMD held on to the breakouts on the retest. And if we break out higher than the high, probably coming on up here, 300. And if we can get some momentum going, 450 would be the next upside target above that. Their CEOs talking about how much backlog they have on data center orders. Good news. ASML came up right in the, like we went just above where I thought we would go, and then we've just been sitting here. For those of you that caught that move, when I called it back here, great job. It's too rich for my blood, but worked out pretty perfectly right there. Bounced and rallied right up to the target. I actually called this back here that I thought we were going to do an A, B, C right up in this zone, and that's pretty much exactly what we did. Went just a little higher, but watch out at this point. Without this breaking out, it can easily do a deep retrace right back down in this area. Race coming back up, roadmap line, and that 618. It's kind of the target area right now. Then we see how it reacts up in this area right here. AMD view, that's 2x on AMD. Bulls leveraged. Light keeps rocking and rolling. This has got that pattern where it's got another few months left to it. Pattern is, for those that don't know, those you might be new here. You might not have heard me talk about this before. So after we do a 3 to 6 month consolidation, this is the monthly chart right here. After we do a consolidation that's like 3 to 6 months, and then we break out to a new 52-week high, most stocks that do this will continue to outperform the S&P 500 by 30%, outperform the S&P by 30% for the next 6 to 12 months. 6 to 12 months. So that's kind of something you can count on a little bit. And they've shown the power to do this for like 3 decades. So if you hunt for 52-week highs that have broken out above a 3 to 6 month consolidation. 3 to 6 months. What about 7 months? It's not in the statistics. What about 2 months? It's not in the statistics. 3 to 6 months. All right, 3 to 6 months. This is the pattern. If you want to match the pattern, you match the pattern. If you want to get creative, you get creative. 3 to 6 months, new 52-week high can continue, which that's exactly what I pointed this out back in July, and it just keeps rocking and rolling. I know some of you jumped on it. Some of you told me this was a great one for you. Just keeps on going. Apple Oven did it right here. Now they're taking a little break. That's 2 months. If we get a third month, and then we break out to a new 52-week high, this one can rock and roll again. On. Let's jump back to the daily chart. Apple Oven looks like we want to come on down to the roadmap line on the daily. On. Nice pop back up into the roadmap line resistance. We almost hit the downside. Oh, that could be a. I'm making trades left and right here. So this completed an ABC down. Absolutely beautiful correction to a lower low. This could be done. We've got to see it set up the bounce here, though. I need some sort of reversal pattern showing up. Like a 618 retrace, possibly. Although we could pop up through the roadmap line, retrace, retest it, and then go higher. Roadmap bounce. I'd love to see that too. Coin sitting right on this roadmap line here. This would look best with a little dip right in here. If Bitcoin does that move down, we may see that happen. MU keeps being a monster. I grabbed it back down here. Got out right in here. Beautiful trade. Lily hit the target. Close enough anyway. That's the target, 1020. Freaking close. Lilex was my play on that. I grabbed it back here when Lily set that up. I got out just a little bit ahead of the target right there. Beautiful. I had 39 setups ready for looking at today. These are daily chart setups with the bounce off the roadmap line. This one, downtrend, not the sparkiest looking one. Let's turn it on here. Yeah, that didn't trigger the algorithm here in TradingView, but it did on Python. That would be the potential entry, and 96.90 would be the target. 25 trades, 80. You know, how many times have you heard of Arch Capital Group, LTD? It's not a trade that most people heard of. This searches like 4,000 tickers every day for these bounces. Here's one right here, 121.60 target. Fair. When they have less than 30 trades, these statistics down here don't really mean anything. If you try to extract meaning from it, it doesn't mean anything. You're putting meaning to something that could just be a coin flip. 219.34. 24.75, 1.9. Yeah, it's just an average. So the average is 75% and 1.2, and this is just coming in at the average. So even though it doesn't have 30, these numbers are right on pace with the average. So the average, the trade is you enter, you get the bounce, you have the bounce right here. You enter when we get a close above 618. You target 90% of the way to the 1272, which is the 1.1448. That's 75% likely to happen. That's 70% likely to happen. And the stop is $1 below the low. Whatever the low is, $1 below. Low minus $1. That's the stop. Works out. Amphenol, or no, Amphastar Pharmaceuticals. Amphastar. Here's the high, here's the low. Entry right there, 32.58. Statistics don't mean anything here. BHRP. This one's been in it for a while. It just made a little bitty baby smaller bounce. That high, that low. Target on this little baby bounce, 63. And that can work out inside this bigger 67. Right there. DFAR. This has just been bouncing sideways. The algorithm is in the trade from way back over here. It's triggered entry, entry, and triggered another entry right here. Target's right up in here, around 24. This is not a big mover, so doesn't really catch my attention much there. Dollar General, I like this one. So we've got this bigger pullback sitting here, but then we just did another little baby pullback and triggered the pattern. 109.69 target. Let's check out how DLTR is going. Oh yeah, baby, go. I have a couple hundred shares of this with some upside calls, sold at 125. Out to December. Keep going. That'll potentially complete a 5 up. Which can result in a pullback to the same vicinity here. So if you want to get out and then buy back in back down here, it'd be a good plan. DGX. The last one worked out pretty good. Here's the high, here's the low. There's the potential entry. And 200 target. ETE is the wrong ticker. Here's the high, here's the low. There's the entry, 145.78. This one's pretty good. More than 30. Basically 80. And higher than 2. I like that. That's the kind of stuff I'm looking for. Statistically significant. That means it trends, it pulls back, it continues, and it does that reliably 80% of the time. And the profit factor, it tends to win $2.38 for every dollar you lose. 145.78 is the target. Now this can take 7 months to play out, so it may take a little while. And that one took a little while. This one does tend to trend. It's in the energy sector too, so nice one right there. DVN, Devon Energy, another energy stock. Here's the entry, 38 target right there. A little less awesome, but see, 2 losers is not going to wreck these numbers here. So 75 is pretty much right on pace with the average. And profit factor, 2.6. That's really nice. That's way higher than 1.2. And this one's in it from back here. So it's got a much bigger target going, but here's a little mini pullback, 144.60. EXPI. Grab the right fib tool. Here's the high, here's the low. Entry, 11.85. Now, low price stuff under 20, not my favorite. Tends to be less reliable. Big players just don't play in the, it's kind of like playing the kiddie pool. Stuff under 20 bucks, not as reliable. But it's all included in the numbers. It's just not as reliable. 24.96. And the stops are much bigger. You think about it. When you're at 10 bucks, a dollar stop is 10%. When you're at 100 bucks, a dollar stop is 1%. FMX. There's a lot of these on here today. I'm looking for 101.50. FNF. Here's the high, here's the low. 62.43. FRT. Here's the high, here's the low. Entry 103.75. Here's the entry 47.35. GRWG. Here's the high, here's the low. There's the entry 223. Low price stuff, caution. This one's in it from back here. Here's the high, here's the low, there's the entry, 2816, HDV. I'm just ripping through these because there's a bunch. 124, ICF. This one's bounced in this. You can see, like, I've not been super keen on these. It's been stuck in this for months, just bouncing sideways, and I have no high expectation that it's going to just pop all of a sudden. 63 on that one. This is a real estate investment trust sector done by iShares, which is BlackRock's real estate investment trust. So there's the high, here's the low, there's the entry, 98. Real estate investment trusts don't tend to trend. So it's just been my experience. 660. JLL. Here's the high, here's the low. 329. Losers are bigger than winners on that one. 382. NKSH. Here's the high, here's the low. Entry, 3257. YLU. Here's the high, here's the low. There's the entry, 2812. ORI. Here's the high, here's the low, there's the entry, 4481. That's pretty smoking. I like that. The profit factor a little light, but I like it. Here's the high, here's the low, there's the entry, 8706. Another pretty good one right there. This one fired off back a couple weeks. It's been in it for a long time here. Another one just kind of going sideways. Another real estate investment by Schwab. SDVY. That one didn't actually hit. SENA. SENEA. Wow, that's a pretty bounce right there. 127 on the upside. SUI. Yeah. Something wrong there. TDS. Got the high, we got the low. Didn't actually fire off, but 43. Target TDW. Here's the high, here's the low. Entry 6626. Another fair one. USMV. We don't get very many days where there's a crap lot of these. So, and this is a crap lot. Usually there's 3 or 4 or 5. Today there's 39. So 96. VERA. Here's the high, here's the low, there's the entry, 3356. No history on that one. VRE. It picked up that high, this low. Target at 16, but if you want to wait for the bigger entry, it's 16 target up there. It picked it up because of that touch below the roadmap line right there. And XOP, this one's been fairly reliable to get a little bit higher. Here's the entry, 142.06 on that one. And nice 3 profit factor. Not enough trades to be statistically significant, but those numbers are looking pretty good if it can keep it up. If it can keep it going. So buys for the day, watch out. We'll probably grind on up a little bit. May not have much going on. I do want to caution one thing on the calendar. I'm not sure what's going on here, but FOMC member, FOMC member, FOMC member, FOMC member, governor board member. There's some more of these too. Let's see, where are they? They're like stacked up. That's not even all of them. There's more of them speaking than that. There's like 8 of them speaking today, or something like that. Or there's 8 speaking engagements today, something like that. Kind of weird. Oh, that's tomorrow. That's why. Here it is. Today, that one, that one, that one, that one, that one, that one. So they're stacked up today and tomorrow. Like, what the heck is going on? Why are they all speaking? 1, 2, 3, 4, 5, 6. I mean, 7. Yeah. I think I missed one somewhere. But they're all speaking. Like, why the frick are they speaking? Usually they're trying to push some sort of narrative. So something's going on. Something's up. Careful out there. I'll be back. Market Masters 11:30, and I'll be back tomorrow. Same bat time, same bat channel. Make sure you subscribe. Make sure you hit the alerts, or the notifications, all notifications, or set a reminder in your calendar.